Welcome to FXTech's comprehensive analysis of the AUD/JPY currency pair for the period of September 29th through October 4th, 2025. In this analysis, we'll examine the technical indicators, fundamental drivers, and key market events that have shaped this pair's recent performance. We'll also provide detailed short-term and mid-term outlooks, along with specific trading strategies to help you navigate this market. This report was prepared on October 5th, 2025, and incorporates data from multiple trusted sources including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex. Let's dive into the current state of the AUD/JPY market. As of our analysis date, AUD/JPY is trading at 98.080, showing a modest gain of 0.09% on the day. The 24-hour range spans from 97.96 to 99.48, indicating moderate volatility. Looking at the technical levels, we have key resistance at 101.00, with major resistance at the psychologically important 100.00 level. Immediate resistance sits at 99.50. On the downside, immediate support is found at 97.96, followed by major support in the 97.50 to 97.00 zone. Deeper support lies between 96.50 and 96.00, which corresponds to the January low area. These levels will be crucial in determining the pair's near-term direction. The technical picture for AUD/JPY shows strong bearish momentum. TradingView's summary indicator is flashing a sell signal. Breaking this down further, the moving averages on the daily time frame are showing a strong sell, with 10 indicators bearish and only 5 bullish. The oscillators present a more neutral picture with 5 neutral readings, 3 sell signals, and 3 buy signals. The RSI sits at 50.86, right in neutral territory, while the MACD at negative 0.54 shows bearish divergence. The 55-day simple moving average at 97.05 is below current price. Action Forex bias indicators show downside bias on both hourly and 6-hour timeframes, while daily and weekly remain neutral. 4 major events have shaped AUD/JPY's recent performance. First, Sanae Takaichi's election as Japan's prime minister initially triggered yen weakness, but her subsequent comments against an excessively weak yen helped stabilize the currency. Second, escalating US-China trade tensions with President Trump's threat of 100% tariffs on Chinese imports starting November 1st hit the Australian dollar particularly hard, given Australia's export dependence on China. Third, the Reserve Bank of New Zealand's surprise deep rate cut of 50 basis points sent shockwaves through commodity currencies, including the AUD. Finally, rising BOJ rate hike expectations, following Takaichi's statement that there's no immediate need to revise BOJ policy, has provided support for the yen. For the next 1 to 2 weeks, we see 100.00 as the key level to watch. Our base case scenario, with a 60% probability, forecasts a continued decline toward the 97.50 to 97.00 support zone, driven by the confluence of bearish technical signals and negative fundamental factors from US-China trade tensions. The bearish scenario, with a 25% probability, envisions a break below 97.00 toward 96.50 to 96.00 if trade tensions deteriorate further or risk-off sentiment intensifies. The bullish scenario, with only a 15% probability, would see a short-term recovery to 99.50 to 100.00 if positive trade developments emerge, though we expect 100.00 to cap any upside. Looking 1 to 3 months ahead, US-China trade negotiations are the key driver. We assign a 40% probability to trade tensions easing, which would see constructive negotiations lead to tariff rollback or delay, benefiting the AUD from improved risk sentiment and China growth outlook, potentially rallying toward 102.00 to 103.00. A 35% probability scenario involves prolonged uncertainty where negotiations drag on without resolution, keeping AUD/JPY range-bound between 96.50 and 99.50. The 25% probability negative scenario involves trade war escalation, with 100% tariffs implemented on November 1st, causing sharp AUD weakness and potential decline toward 95.00 to 96.00 as China growth concerns intensify. We recommend two distinct strategies. Our primary strategy is a short position with a bearish bias. Enter short between 98.50 and 99.00, place your stop loss at 100.20, and target 97.50 for the first profit level and 96.50 for the second. This offers a risk-reward ratio of 1 to 2. The rationale is strong bearish technical signals combined with US-China trade tensions weighing on AUD and potential BOJ rate hikes supporting JPY. For counter-trend traders, consider a long position only at major support between 96.80 and 97.00, with a tight stop at 96.00 and targets at 98.50 and 99.50. This also offers 1 to 2 risk reward. Only take this trade if positive trade news emerges or oversold conditions develop. Let's summarize the key points. Technically, we have strong bearish signals with TradingView showing sell and moving averages indicating strong sell, though RSI remains neutral at 50.86. Fundamentally, US-China trade tensions with the 100% tariff threat are heavily weighing on AUD, while BOJ rate hike expectations support JPY. Short-term, we see a 60% probability of decline toward 97.50 to 97.00, with 100.00 remaining key resistance. Mid-term outlook is highly dependent on US-China trade negotiations, with a potential range of 95.00 to 103.00 depending on outcomes. The key risk is the November 1st tariff implementation deadline. Our trading recommendation: maintain a bearish bias, short on rallies toward 98.50 to 99.00 with stops above 100.20, targeting 97.50 and 96.50.